You know that form you get every year, the P60? Most of us just, file it away and completely forget about it. But what if I told you that little piece of paper could be the key to unlocking hundreds, maybe even thousands of pounds? Well, with a little help from the experts at ProTax Accountant, we're going to break down exactly what a P60 is and why you should never ever ignore it again.
So, let's kick things off with a number that should really get your attention. £700. According to HMRC, that is the average tax refund for people who actually claim it back. Just think about that for a second. That's a weekend break, a brand new laptop, or a serious boost to your savings, and it could have your name on it.
And that really leads to the million-dollar question, doesn't it? Well, maybe the £700 question. With over 3 million people in the UK overpaying tax every single year, could you be one of them? It's a huge number, and it means a whole lot of your hard-earned money might just be sitting with HMRC when it really should be in your bank account.
So, how on earth do you find out? Well, the very first clue is probably hiding in plain sight. It's on a form you get once a year, you probably glance at it, and then it goes straight into a drawer. Yep, you guessed it, we are talking about your P60.
Okay, so let's start with the basics. In this first section, we're going to unlock what this form actually is. Think of it as your official end-of-year report card for your money.
So what even is a P60? Put simply, it's an official summary from your boss. It shows everything you've earned and all the tax and national insurance you've paid throughout the tax year. And that tax year, by the way, runs from the 6th of April to the 5th of April the following year. It's basically your personal tax receipt for the whole year.
And listen, this isn't just a nice to have from your employer, it's the law. If you are on the payroll on the very last day of the tax year, that's April 5th, they have to give you a P60. The deadline for them to get it to you either in the post or online is May 31st.
Honestly, this one document is packed with your financial info for the year. It's got everything: your personal details, your employer's details, your total pay before tax, and then the really important stuff, like exactly how much income tax and national insurance they've taken off. It also shows things like student loan payments and, crucially, your final tax code for the year.
All right, so now we know what's on it, but what do you actually do with it? In this next part, we're going to see how to turn this piece of paperwork into a seriously powerful tool for your finances.
So why should you actually care about your P60? Well, for starters, it is your official proof of income. You absolutely need it if you're applying for a mortgage or a big loan. It is the key piece of evidence you need to claim back any overpaid tax from HMRC. And if you're applying for benefits or you have to file a self-assessment tax return, this document is non-negotiable.
Okay, so you get it. It's important. But that leads to the big question, right? How can you actually use this form to check if you've paid the right amount of tax? It might sound a bit daunting, but trust me, it's simpler than you think.
Let's do a quick check right now using the 2025-26 tax year figures. Step 1. Go find the total pay figure on your P60. Step 2. Take away the personal allowance, which is £12,570. Step 3. Apply the tax rates to what's left. And finally, Step 4. Compare the number you get with the tax-deducted figure on your P60. If your number is lower, you've probably overpaid.
And to do that little calculation, you're going to need these numbers. So for most of the UK, you pay zero tax on your first $12,570. Then the next chunk of your earnings is taxed at 20%. Then it jumps to 40%, and so on. Now, we'll get to Scotland in a bit because their system is a little different. And here's why that quick check is so worth it. Let me tell you about Jane, a marketing manager from London. Her P60 showed she earned £45,000. So take away her personal allowance, and her taxable income was about £32,400. The tax on that should have been around £6,480, but her P60 showed she'd actually paid almost £6,900. That's a $400 overpayment, all because of a wrong tax code, which she was able to claim straight back. That's not all. Here's where most people go wrong. Let's look at some of the common traps and pitfalls that can lead to some really simple but costly mistakes with your P60.
Okay, here's a quick pro tip for you. Your tax code is absolutely crucial. For most people, the standard tax code for the 2025/26 tax year is 1257L. That basically means you're getting your full tax-free allowance. If you see a different code, especially an emergency one like BR, W1, or M1, that is a massive red flag that you could be paying way too much tax.
Now, for a classic scenario, you need your P60 for a mortgage, you're tearing the house apart, and you just can't find it anywhere. What do you do? Well, first things first, do not panic. There are really simple solutions.
Your first stop should be your employer's HR or payroll team. They can usually print you off a replacement, no problem. But honestly, what's even easier is you can just log into your personal tax account on the gov.uk website. All the info from your P60 is right there, and you can get it anytime you want. It's a real game changer.
You know, people get the P60 and the P45 mixed up all the time. So let's just clear this up right now. A P60 is your annual summary. It covers the entire tax year for a job you were in on April 5th. A P45, on the other hand, is a leaving document. You only get one when you leave a job, and it just shows your pay and tax up to your last day. Simple as that.
But life isn't always that simple, is it? So what about more complex situations? In this next section, we'll dig into what the P60 means for people with more than one job, a side hustle, or for those of you living up in Scotland.
So if you're juggling a couple of jobs, it's actually pretty straightforward. For every single employer you are working for on April 5th, you'll get a separate P60. It is so important that you collect all of them to get the full picture of your total income and tax.
And here's exactly why checking them all is a must. Meet Tom from Bristol. His main job had the right tax code, using up his personal allowance, but his second part-time job put him on a BR, or basic rate tax code. That meant every single penny he earned there was taxed at 20% with no tax-free bit at all. By checking both P60s, he realized he'd overpaid by a whopping £900.
And here's a quick did you know. If you're purely self-employed, you actually won't get a P60. Your proof of income is all down to your own business records. However, if you've got a part-time job on the side of your main hustle, which so many people do, the P60 from that job is a critical piece of the puzzle you'll need for your tax return. Now, stay with me, because this next point might surprise you. Are you a Scottish taxpayer? If you are, the rules we've just been talking about, well, they don't quite apply to you. Your system is completely different, and not knowing that can be a really expensive mistake. I mean, just look at this. Instead of 3 tax bands like the rest of the UK, Scotland has 6 for the 2025-26 tax year. 6! And the rates go all the way up to 48% for the highest earners. It's a much more detailed system, so you have to use these specific bands when you check your P60. So, the bottom line for Scottish residents is this. First, remember you've got 6 tax bands, not 3. Second, check your P60 and look for a tax code that starts with an S, like S1257L. That S tells you you're on the Scottish system. And finally, just double-check that your employer is actually using the correct Scottish rates.
Okay, we've covered a lot of ground. So for our final section, let's pull it all together and talk about what you should do next. How can you put all of this great info into action, like right now?
Here is your simple 5-step action plan. Step 1. Go and find your latest P60. Step 2. Just give it a quick check. Is your name right, national insurance number, and especially that tax code? Step 3. Make sure the total pay figure matches up with your final payslip for the tax year. Step 4. Run that quick tax calculation we talked about. And Step 5. If anything at all looks a bit off, get in touch with your payroll department or even HMIC directly.
So, if you take one thing away today, let it be this. Please, don't just file your P60 away in a drawer. It's not just a dusty old summary of the past. It's a powerful tool you can use right now to check on your financial health and make sure you're not paying a single penny more in tax than you absolutely have to. But look, tax can be complicated. We get it. Especially if you're juggling multiple jobs, you're self-employed, or you have other income coming in. If you've looked at your P60 and you're still feeling a bit unsure, or if your situation is just that little bit more complex, then getting some expert help is always a good idea.
The team at Pro Tax Accountant who helped us put this whole thing together are ready to help. If you have any questions at all about your P60 or any other tax stuff for that matter, you can get in touch with them directly. All their contact details are right there on the screen for you.
And hey, for more clear, simple guides just like this one to help you stay on top of your finances and feel in control, make sure you hit subscribe on the Pro Tax Accountant YouTube channel.
So I'll just leave you with one final question. Now that you know how powerful that forgotten piece of paper can be, and knowing that hundreds, maybe thousands of pounds could be at stake, how much of your hard-earned money are you really willing to just leave on the table? Thanks for watching.